Today, I'm going to talk about a really common saying that you hear all the time in investing and trading. You don't go broke taking profits. You don't go broke taking profits. Is that true? Sorta. I don't really think so. I actually think you can go broke taking profits, and I'll tell you why. Too often, people, as soon as they begin to make a little bit of money on a position, they close out. And then you're never gonna have the risk-reward ratios that will actually make you a consistently profitable trader. As soon as you're a little bit in the money, you start exiting your positions or taking off way too much of that position. The number one reason why traders are not successful in trading is a lack of discipline when it comes to risk management and money management. The number two reason why people do not become successful in this business is because they fail to hold their winners long enough and for a big enough move. You have to have a game plan in place, both for the downside if the trade's gonna fail, but also for the upside if your trade's gonna work, in order to really maximize that reward. Because I'll tell you what, if every single time your position is 1 times your risk in the money and you sell out that entire position, you're probably gonna go broke because you took those profits too early. The risk reward ratio that I want, and you hear me talk about this all the time, it almost sounds ridiculous. I want a risk reward ratio that's infinite. I want infinite reward for the risk that I'm taking. What you should do is consider having a game plan, first of all, where you're covering that risk, and then secondly, where you're not just exiting your entire position at a target, especially if you are with the trend or with the momentum. If you're against the trend, then fine. You probably want to be a little bit more aggressive in your profit taking, because most trades that are against the trend do eventually fail, because trends tend to last for longer than most people expect. Just assume that the trend in the stock is gonna last forever. It probably won't, but it actually could potentially last for years and years and years. There's countless examples in the market of that happening. Look at the S&P 500. With the exception of a couple little blips on the radar, like the coronavirus crash, the S&P 500 has basically been in an uptrend since the bottom of the financial crisis crash in 2009. So what are we on, like year 12, 13 of that uptrend more or less continuing? And there's been people and pundits on CNBC or whatever else who've been constantly downing that, saying, oh, this market is up too much, like it's gonna crash, like sell your entire position. Well, if you listen to them, unfortunately, it's probably only cost you a lot of money, as most stocks I'm looking at are right at or right near all-time highs, even as we're having this conversation right now. So, implement a game plan for yourself for reward maximization. Get your risk covered on your position, but if you're with that trend, utilize a system of trailing stops in order to get reward maximization. I personally have a system for trailing that is comprised of 3 rules. If you want to learn about my system, then you got to get involved with my team. Check out the links in the description where you can learn about how you can become a part of my team, and you can learn about all the rules that I have for my trading, and you can potentially implement them into your own trading, such as the trailing stop rule. I'll see everybody next time.